If your goal is to make at least $10,000 this year trading, I'm about to give you the exact step-by-step blueprint that helps me make anywhere from $10,000 to $20,000 per month, consistent day-by-day basis. Just like how I took this trade this morning, which you can clearly see here, this is where I was able to short the market and I was able to buy my position back at this exact low. Proof you can clearly see here, this is exactly where I shorted my position within that 15-minute fair value gap. You can clearly see this is where I ended up buying my position back. This was the exact execution that I shared on my Instagram, which made me a little over $2,500 on the day. Because if you're not following me on Instagram, it's at Arkhamtrades. This is where I share my trades every single day, every single week, and my monthly P&L. And I've been doing it for the last year and a half since I've became a full-time trader, as well as I share all my payouts and everything like that. So if you want all the transparency from me, as well as see the trades I'm taking on a consistent day-by-day basis, I urge you to follow my Instagram. This is the exact trade that I took on September 24th, 2 days ago, which you can clearly see this is where I executed my trade, and this is exactly where I got out. This one trade alone made me a little over $3,400 that day. Then the next day, which is September 25th, which was just yesterday, you can clearly see where I entered my position, and this is where I got out the trade right there. This day alone made me a little over $5,400. This is how I trade on a consistent day-by-day basis, make anywhere from $10,000 to $20,000 per month in payouts. Clearly you can see by those examples, this week alone I've made over $10,000. In this video, I'm about to break down the exact strategy that I utilize on a consistent day-by-day basis. No BS, no fast editing, raw information that helps you when it comes to becoming a consistently profitable trader. Anything about this channel, the only thing I give is trading education to help you make money trading. One of the realest educators out there that's going to tell you trading is hard, you're probably going to suck at it. You want to become a consistently profitable trader like I am, being able to hit these massive withdrawals consistently, have to be a pretty disciplined person. I'm someone who doesn't BS. I don't give you guys no fluff, no false information. Everything that I teach you on this YouTube channel is straight education to helping you make money trading. And I've taught hundreds of students that went on to make their first 5,000, 10,000, and even I have more than a handful of students who are consistently profitable traders and have went full time in only a year. It doesn't take you 3, 4, 5 years to become profitable. With the right mentor, with the right guidance, and the right education, you can achieve it in as quick as 6 or 12 months. The only thing that I urge you to do on this video is to watch till the end, because everything that I break down is step by step that you have to understand. And if you miss a single step, then it messes up the entire process. So watch till the end of this video, be patient, and take notes. Well, as only if you get value from this video, hit that like button to support the video and push it to the next trader so they can learn how to trade. And if you want to become my student to helping you make your first 5,000, 10,000, or even become a full-time trader, then click the first in the description, book a free call, talk to me personally, and let me see where you're at in your trading journey and how I can help. One of the questions that's probably on your mind is, what is my exact trading strategy? I told you I didn't necessarily have a trading strategy. Hold on, I'm not necessarily an ICT trader. I utilize ICT concepts like fair value gaps, order blocks, breakers, and stuff like that, but I am more so an algorithmic trader, meaning that I trade in alignment with the algorithm. I'm not trying to predict the market. Problem with ICT concepts is it's very nuanced. The mechanical strategies you've probably seen is it creates this liquidity sweep, breaker structure, comes back into its fair value gap to push higher. Trading like this consistently is not going to make you profitable, or at least in the sense of how I want to be profitable. I want to trade in a way that allows me to trade every single day across any market environment. I can trade continuation markets, reverse consolidation markets. I can profit in any single market environment. If I trade a mechanical strategy like this, it's not going to work across all market environments. You see, this is a reversal strategy. Price took out this liquidity sweep, then we've seen this breaker structure, meaning that the strategy works during reversal markets. What if the market environment changes where it simply has a liquidity sweep and it breaks out to the upside and it doesn't give you a pullback? Now, how are you going to capitalize on that? You can't. What happens during an inducement market where it creates this liquidity sweep, you see this breaker structure come back lower to take you out and then go higher. Now, how are you able to trade that? Well, you essentially can't. You can clearly see price does end up taking you out before giving you the real move, meaning that trading a mechanical strategy does not allow you to trade every single market environment, and when the market changes, you're not able to adapt. Why some traders are in situations to where they have a good period where they can trade consistently, and then the market changes, and next you know, liquidity sweeps, fair value gaps don't necessarily work. How I trade is in alignment with the algorithm. I'm not talking about the ICT algorithm. I'm talking about intermarket algorithms. We want to take note of three specific markets. First, we have the S&P 500, have the NASDAQ. Last but not least, we have the Dow Jones. All three of these markets are in a way intertwined with each other. Specifically, the S&P 500 in alignment with the NASDAQ 100, as the Dow Jones 30 are these markets connected in a way. When you look at the back end of the S&P 500, it's in the name, the S&P 500. It's the top 500 stocks within the stock market. 100 is the top 100 tech stocks within the market. Dow Jones is simply the top 30 stocks within the market. Both of these stocks are inside of the S&P 500, meaning that if NASDAQ is pushing higher, Dow Jones is also pushing higher, as the S&P is also pushing higher. Right here would be referenced as intermarket correlation. Three markets are correlated to each other to going in the same direction. Now, what if there's a situation to where one market is going one direction and the other market is going the other? The NASDAQ opens up and it continues to see higher and higher prices. But if we look at the Dow Jones, when the Dow Jones opens up, it's coming lower, or the Dow Jones finds support to then go higher. This right here is what we call intermarket confusion, where the NASDAQ opened up and went higher, Dow Jones opened up and went lower. Even though the Dow Jones opened up and went lower, it simply went lower to gather liquidity, find support to then push higher. Would you say that this would make the S&P bearish or bullish? Would obviously make it bullish. First, the S&P opens up and consolidates because both of the markets are opposing each other. One was going higher and the other one was going lower. The moment that one of them finds support to continue going higher with the other, this then gives you that real move. And this right here is what you call intermarket confusion. The reason why it's called that is because it confuses a lot of traders. You see, back in the day, how a lot of hedge funds and even big traders used to trade is with all of the markets in alignment with each other. NASDAQ was going higher, Dow Jones also went higher with it. Now, with this new market environment that we're in, the NASDAQ can go higher and the Dow Jones can go lower, confusing a lot of traders. People would see the NASDAQ going higher and the Dow Jones going lower as polar opposites, and they would not have an idea of where the marketplace is going. Not until the Dow Jones here finds a level of support to start going higher, the NASDAQ continues to go higher, then it gives you the real move. So the market starts off confusing traders before it's in alignment. But not least is intermarket consolidation. When the NASDAQ opens up, goes higher, continues to go higher, Dow Jones simply opens up, goes lower, and continues to go lower. In this scenario, the S&P would consolidate. To clearly see, these are the three market environments that happen on a consistent day-by-day basis. Either we're in a continuation market, reversal market, or a consolidation market. I know whether we're in one of these three things based upon how the market is in alignment with each other. All of them are going higher at the same time. We're in a trending market or a continuation market, so I want to be buying. One of the market is going higher and the other one is going lower, then I'm going to be patient and wait for one of them to go in alignment with the other. In this case scenario, the Dow Jones was simply just going lower, find support, and then go higher. Position to where the market is different from each other, like the NASDAQ continues to go higher, Dow Jones continues to go lower, then I simply don't trade for that day. This is the main emphasis that I look for on a day-by-day basis. It gives me the idea for whether the market is going to go higher or lower. This is what I utilize on a day-by-day basis to give me an idea whether the market is going to go higher or lower. But that's not it. Now I'm going to go to the charts and I'm going to break down every single day individually and how I was able to capitalize on every single trade, or where the exact high was going to be, where the exact low was going to be, and getting out at the perfect exit. So if you made it to this part of the video, continue watching because this is going to be the most important lesson. First, I'm going to break down one day's trade and how I was anticipating a breakout to take place to reaching back below these lows. Time that I trade specifically is between 9:30 12 p.m. EST. see, primarily when it comes to entries, I take my entries on the 15 minutes time frame. Main thing that I look for on a consistent day-by-day basis in terms of where the marketplace is going is by paying attention to either liquidity or inefficiencies. When it comes to liquidity, it's pretty simple. Price refers back into prior session highs and lows and prior daily highs and lows. I want you to go to the indicators tab right here. Just search up kill zones. I want to go by kill zones by @Joshu. Basically marks out all the different session liquidities. Marks out the PM session highs and lows, Asia session highs and lows, London session highs and lows, and the New York AM session highs and lows. So these are liquidity pools within the markets that price refers back into. So when I'm coming into markets, I'm simply just creating a picture. We'll go up to the 1 hour time frame. 1 hour time frame, we can clearly see here price had seen a massive drop to the downside. Liquidity pools, previous day highs and lows, are areas of liquidity that price tends to come back into around 80 to 90% of the time. Right, it's very prominent that price is going to come back into previous day highs and lows. In this case scenario, the first thing I want to take note of is areas of liquidity above us, previous day highs, previous day lows below us. So first thing I want to take note of. And we can take note of inefficiencies. So in this case scenario, we have multiple fair value gaps. We have a fair value gap right here, separation between this candle's low and this candle's high. That separation right here, bam. Fair value gap right here, bearish fair value gap up here, bearish fair value gap right here. So how I trade is what you call discretionary. I have a specific mechanical trade strategy where I'm looking for it to do this, to do this, to do this, to do this. No, trade based upon what is the market telling me and what makes the most sense. It makes sense for price to go higher and go all the way back up here. Does it make more sense for price to go lower into these previous day lows? It makes more sense the price to go to the previous day lows. And why is that? We had a massive drop to the downside from the prior day. We're simply seeing a retracement back within this bearish fair value gap. Find resistance within this level and we can see price break away from it. All three markets break away from it. Can then frame a short the target back below this London session low, Asia session low, and previous day low. Now when I come down to 15 minutes time frame, London session low, Asia session low, now I see those previous day lows. Pretty much about it. That's how I create my daily bias. Where have we been? Been in an overall downtrend, seeing this massive spike to the downside. Where we're currently at, we're currently within this resistance level. And where do we anticipate price to go next? We're anticipating price to see a reversal to go lower. If price were to open up, go higher, and just continue to go higher, I would reassess and change my bias as the market opens. But as long as the market opens and I can see emphasis that it does not want to go higher and instead break lower, then I can frame a short to go lower. Trying to predict the market. I'm not saying price is going to come back into this fair value gap and now I can frame a short to go lower. I'm saying there's a fair value gap here. There's liquidity down here. If the market opens up and the algorithm shows me that it wants to go lower, then I can frame a short. It's a big difference between ICT traders trying to predict the markets and then they get their stop loss hunted a million times and blow their accounts versus someone who trades with a plan, wait for that plan to come into alignment, and then as price is trading in alignment with that plan, I can then get into a trade and maximize my reward, which that's exactly what happened. So we can see here 930 ends up opening up right here. You can see an immediate spike to the downside. Once price opens up right here, and we see a massive drop to the downside, basically breaking back below this last up close candle. I'm paying attention to this last down close candle right here because you have to understand the algorithm. Price is bearish, it should be breaking back below levels of support. It's bullish, it should be breaking back above levels of resistance. Last down close candle before this push higher is a level of support. As price comes back within this last down close candle, if it comes down into this level, finds support to go higher, then that shows me that the algorithm does not want to go lower. Instead, I can then potentially reassess for a pullback to continue going higher. Price breaks through this level of support, then it will retest it to find resistance to continue going lower. This play out right here. Clearly see right here, price breaks back below this level. This is where I frame my short setup. I had a really good stop loss, about 12 points back up here. I was reaching back below this daily lows right there. Additional confirmation is if we look at the NASDAQ, you can clearly see the NASDAQ was pushing lower, took out those Asia session lows, reaching down into those previous day lows as well. And if you look at the Dow Jones, opened up, it gave this initial spike to the upside. Remember what I said, the intermarket confusion. The Dow Jones originally opened up and went higher, but you can see it found resistance right there to start going lower. NASDAQ going lower. Dow Jones gave a fake move higher to now go lower. Now that I'm trading the S&P 500, most likely that price wants to go lower. The algorithm wants to go lower, and I can trust that this short is going to pan out. And you can clearly see price comes back higher into that fair value gap. just a little bit, then sees a big spike to the downside. That was Wednesday's trade. And clearly see right here was where I entered my short. I had entered my short a little bit earlier just because I knew it was going to break through that last stop close candle based upon the Nasdaq and the Dow Jones going lower. In your case scenario, you want to wait for the breaker structure as you're more of a beginner trader learning this strategy. As we get that breaker structure, as all the markets are in alignment, it's a perfect trade idea to reach back below those lows. It's simple, easy to understand. And we're going to go into the next day, which is Thursday, which is how I was able to predict the low and catch the buys. Market, like I mentioned, we create our daily buys, basically anticipating where have we been, where are we currently at, and where do we anticipate price to go next. Is it an uptrend or is it in a downtrend? Is it trying to go higher or is it trying to go lower? Are we currently at a level of resistance or a level of support? We anticipate price to go next. Are we going back into liquidity or inefficiencies like fair value gaps? That's it. Only way that the algorithm moves on a consistent day-by-day basis. We're not trying to overcomplicate it, add all this jargon, macros, CRT, all this crap that complicates your trading. And you want to make money trading. Making money trading is by simplifying as simple as possible and creating a strict routine and a structure that you trade on a consistent day-by-day basis and allowing that experience and the self-development build over time. This is how I teach my students to becoming consistently profitable traders, not a single strategy, by simplifying their trading and building a routine and system around it that they can develop. If they take a win, they know why they won. If they took a loss, they learn from it and self-develop and improve. This is how you become a consistently profitable trader, and this is how I was able to make more than a handful of full-time traders. I have well over 20 plus students that made well over $10,000 and more than 30 to 40 students that made either $1,000 or $5,000 in payouts, because I don't teach them BS, bullcrap, or stuff that doesn't work. I give them solid education and advice that makes them money. If you want to become one of my students and you want to trade live with me every single morning, weekly coaching calls plus 20 to 30 hours worth of education and homework to help you become a consistently profitable trader within the next 6 or 12 months, click the first link in the description, book a free call, talk to me personally. Let me see where you're at. Let me see where you're struggling with and how I can help you become consistent. Where have we been? We've been in an overall downtrend, reaching back below lower prices. 1 hour time frames, price breaks back below this low, reaching back lower. Looking like a falling knife to say. We're currently within this last down close candle. I'm gonna take note of this last down close candle right here. This was the last down close candle forcing this push to the upside. As we can take note of this long wick, this is a rejection block. You clearly see there's a long wick within the markets. What you want to do is you want to split this up into quadrants from the high of the wick to the low of the wick here on the 1 hour, 25, 50, and 75%. These 3 levels are support levels. Order block is a support level. Where are we currently at? We're currently within levels of support. I'm not trying to sell within support. We've already seen a massive push to the downside. The market opens up and goes lower. I want to see a meet reaction within the support levels go in the opposing direction. Where can we anticipate price to go next? We created this bearish fair value gap right here. I want to see the market open up within the support level or maybe even continue even lower down into that rejection block. Find a level of support to come back within this fair value gap, potentially back above these high points. So we have this London session high and we have this Asia session high. Clearly see how I make my trading simple. Overcomplicating it. I'm not looking at a million things. I don't care what's going on over here. I don't care. Focusing on what is currently happening right now. And now we're in support. Want to see the algorithm find support within this support level. All the markets in alignment to go higher. If we can get that exact signature here and frame along to come back up here or back up here or back up here. What's that? Now I'm gonna go down to the 15 minutes time frame. The 15 minutes time frame, we have our liquidity pools, those London highs, Asia session highs. We've already taken out the lows, those London lows and Asia session lows. We've already took out multiple areas of liquidity below us. Now I want to see if price can find support here and I'll start attacking areas of liquidity above us. 930 is just about to open up here. Right, we have the London session highs and lows, Asia session highs and lows, PM session highs and lows. You can clearly see during the London session, we've been making an overall down move this support level. As 930 opens up, the reason why I'm not selling here is because I'm not confident in selling here. I see the market open up and come all the way lower. I'm not going to sell at the end of the move. I want to see the algorithm find support here, then see some type of a bounce. It is going lower. I'm going to short at the exact bottom and then price reverses on me. Someone who what you call a contrarian. This is going lower and everyone is saying to go lower. See that as a fake move because the algorithm goes against the norm. If everyone is going one direction, the algorithm is going to go another direction to trick out most traders. We can clearly see 930 opens up, sees this push to the downside. I did not short this. The reason why I didn't short this is because, like I mentioned, I'm going to be selling here. We're already at a significant low point. Market just opens up and continues to go lower and lower and lower. That's completely fine. Either I don't take a trade or I look for a reversal down here. Simply trading in alignment with what makes the most sense. What makes the most sense is we're within a level of support, seeing a massive drop to the downside. We have a level of inefficiency above us, which is that fair value gap, to see price find support within support levels to then get back up there. Only trade what makes the most sense and what's going to make me money. If it doesn't make sense and it doesn't make me money, that's completely fine. I'll walk away, I'll not take a trade, and I'll simply just come back tomorrow. The reason why I can consistently make money trading is because I don't come to markets every single day looking to make money. Come to markets every single day looking to take the trades that make the most sense. To that, I end up making money. So it's not about profits, it's about the process. Process is a byproduct of the profits. Just remember that. 945 opens up, sees a push to the upside and creates this rejection right here. You can see 9 AM opens up and sees this push to the upside. This was my exact entry right here. Break down why I bought right there. Look at the 5 minutes right here. You see here on the 5 minutes, this was that initial push to the upside. I didn't necessarily buy here on this initial push to the upside because I was being a little bit more patient. The market doesn't always down into a support level and then immediate reverses from it. Sometimes the market will come down to a support level, a little bit of a bounce, and then come back lower and then give you the real move. And that's what I was waiting for. Off of the first reaction, you never want to just buy. You want to be patient and wait for the 15-minute to close. So I waited for 945 to close, and you can clearly see it closed with this bearish wicks along with within the markets. After that, I wanted to see how was the algorithm going to react. You clearly see here that off of that rejection at those highs, price came back within this last down close candle. Exactly like I mentioned, always paying attention to last up close candles and last down close candles. If we're bearish, price will break through this level and continue to go lower. If we're bullish, we'll struggle to break through this level. You can clearly see 950 struggled to break through that low. 9 AM opened up, seeing this immediate push to the upside, and we can look at the Nasdaq. Same time, immediate push to the upside. Dow Jones, immediate push to the upside. All three markets in alignment to going higher. Price is struggling to go lower. Algorithm is telling me that it wants to go higher. Was simply just reaching back over these highs for about 22 points, but the full take profit was basically back up into that 1 hour fair value gap. Half my students did end up holding for. Price ends up finding support back into my take profit right there. A little bit of a pullback down into this 15-minute fair value gap to come back into that 1 hour gap right there. Level support on the higher time frames, that rejection block came back into the 25% right there. I mentioned split them up into quadrants, came back to a 25%. Markets in alignment to go higher. Took my long back into a fair value gap up here. Simple, easy to understand, not overcomplicated to predict the markets, not trying to predict the highs, predict the lows, CRT, macros and all that crap. Simple, easy to understand, trading in alignment with the algorithm. Algorithm wants to go higher, I'm going higher. Algorithm wants to go lower, I'm going lower. You're just copying what the algorithm wants it to do. Nasdaq's going higher, Jones is going higher, S&P is going to go higher. Why am I going to sell? Though there's a bearish fair value gap here. ICT traders, oh, there's a bearish fair value gap right here. It comes with this fair value gap, I'm going to short, go lower. It would have got crushed because they're going against the algorithm. CT will not work if you're going against the algorithm. You have to trade in alignment with where the algorithm wants to go. The level of support here, all three markets are in alignment. There's a fair value gap up here. It's going to come all the way back up there. Trade in alignment with the algorithm. Try to predict the markets. I don't try to be perfect or better than the markets. Trade in alignment with what the market wants me to do. Now this gets us into today. I was able to take the short, reaching back below lower prices. On the 1 hour time frame, take note of a couple things. One thing that I took note of for sure this morning was this fair value gap up here, as this fair value gap right here on the 4 hour time frame. Top down analysis consists of 4 hour, 1 hour, 15 minutes as entry. 4 hour time frame, taking note of those fair value gaps. The 1 hour time frame, taking note of areas of liquidity. We have these Asia session lows right here. Obviously have the previous day lows right there. Have the previous daily highs up here. We have the London session highs up here. Points of liquidity. We have liquidity above us, liquidity below us, areas of resistance above us. Bearish fair value gap right here. Bearish fair value gap all the way up there. The main emphasis coming into today here, we have areas of resistance above us. You can see price open up, rally higher back into this fair value gap. Gonna be buying up here, right? These are bearish fair value gaps. I'm not buying within bearish fair value gaps. To see price find resistance within these levels, potentially see a short take place to come back below these lows. We'll go down to 50 minutes and break it down even more. 15 minutes time frame here, you had 8:30 news. At 8:30 news, we can clearly see price came back into that 4-hour fair value gap up there. And we came back into a level of resistance. And from that level of resistance, we can clearly see price rejected from it. This doesn't mean we're necessarily bearish yet. Like I mentioned, you want to trade in line with the algorithm. Only be bearish price were to break through this fair value gap, make an effort to break back below these lows. That's not close candle right here. We can clearly see that price is bearish is when price is struggling to continue going higher, breaks through these fair value gaps, breaks through these lows. It's the only indication that we can state that the algorithm wants to go lower. Just because we tapped into this fair value gap and seeing a move to the downside doesn't immediately mean that we're bearish until we get confirmation of price breaking through support levels, tapping into this higher time frame fair value gap, and it means that the algorithm is bearish. You can clearly see here 9:30 opened up. Anyone who went short, fall and tap into that fair value gap, they got stopped out. They seen this bearish fair value gap, thought it was resistance, tried to go short, not understanding that they're trading against the algorithm, simply just going lower, short down here, to then come back higher. Market opened up. I didn't take a long here. I was definitely looking at the longs as price kind of came lower support and started to break through it. So as it started to break through this last close candle, I was definitely looking at longs, but I just didn't take them, kind of missed the trade. So in this case scenario, I'm not buying up here. If I'm ever buying a position, I want to be buying it down here. So the fact that I miss a setup for buys down here means that I missed the whole trade. I buy up here, even though it could continue going higher forever. Trade makes the most sense and that I'm the most confident in. I'm not confident buying up here. I'm confident buying down here. So how I trade is very disciplined, and I don't care if I don't get a setup that day or if I don't make money that day. I'm not trying to make money every day. I'm trying to take the trades that make the most sense to me. That's how I make money every day. Opens up, continues higher, not buying up here, don't feel confident. I want to see price come down here. Then we can see here 10 a.m. opens up, sees a big drop to the downside. Following this big drop to the downside, even though I was bullish, now I'm bearish, because clearly you can see here this breaks through this bullish fair value gap here, then price breaks through this last close candle right here. This basically confirms price simply just went higher, take out this area of liquidity, this London session high right here, these previous London session highs, perfectly took out that liquidity pool. Only taking out that liquidity pool, a big drop to the downside. This then confirms bearish prices. Why does it confirm bearish prices? Because price took out an area of liquidity, or it tapped into a resistance level, which was that 4-hour fair value gap, still within that level, and it's breaking back below support levels. Was not bearish because even though it did tap into that fair value gap, it didn't break through support levels. So this was still bullish. This is bearish. It's breaking through this fair value gap and it's breaking through this last close candle. At this point, I was patient, created this 15-minute fair value gap. I'm right here, 15-minute fair value gap. It's my entry within that 15-minute fair value gap right here. Stop loss just back below this high point, reaching back below these equal lows down here. Price ends up coming back higher, tags me in, and this is exactly where I end up taking my position off right here. So for about a 1-to-1 setup right here. The reason why I took my position off right here was because the algorithm simply is not trying to go lower. Like I mentioned, I'm not trying to be perfect, trying to catch every high and low. I'm trying to trade in line with the algorithm. What is the algorithm telling me? Back below this low once, 3 times, 4 times, 5 times, 6 times, was not one to break through it. I take my position off here because the algorithm says it doesn't want to go lower. The algorithm broke through all these support levels. So it told me that it wants to go lower. When it came back into the fair value gap, this was a high probability fair value gap, go lower. The algorithm told me that it does not want to go lower because it keeps rejecting these lows. I ended up taking my position off, even though my take profit was below this low. Clearly see, the algorithm simply said that it did not want to continue going lower, so I took my profits off above these higher prices. The exact execution right there, profit down here, and that was the trade day. Today's trade, Thursday's trade, and today's trade perfectly. It's simple, easy to understand, trading in alignment with the algorithm, not trying to be perfect, following a strict train system, focusing on the process, focusing on those A+ setups. That's gonna be it for video. If you got value from this video, the only thing I ask is that you take 1 second of your day to click that like button and support the video. If you want to trade live with me every single morning, there's access to 30+ hours worth of trading education, step by step to help you become a consistently profitable trader, as well as weekly coaching calls with me and my brother Spec Trades. The first link in the description, book a free call to talk to me personally. Let me see where you're at within your chain and how I can help you become a consistently profitable trader and potentially even a full-time trader within the next 6 or 12 months. Click that first link, book a free call, talk to me personally. Let me see how I can help. If you want to watch another video that goes over smart money traps and all the ways that the market creates traps and liquidity trick you, how to avoid getting faked out and tricked within the market so you can become more consistent, that video is about to pop up right now. So really good video. You should probably check it out. I'm your mentor, Arkhamtrades. Click the like button, subscribe, Comment what you guys want to see next. Be safe.